Good morning, you're watching This World Live. I'm Danny Laurel. It's 10:12 a.m. This Tuesday morning here in Metro Manila. We are a little over 40 minutes into this trading day. Let's go straight to our top story. The government's Build program will be excluded from the Bangko Central's mandated limit on banks' real estate loans. Governor Ben Diokno earlier signed circular number 1093, which raises the limit on real estate exposure to 25% of a bank's total loan book from the current 20%. This move is seen to provide as much as 1.2 trillion pesos in additional liquidity for real estate lending, but the circular states that it will not include loans which are used to finance infrastructure projects for public use, such as those under the Build program. The government is ramping up infrastructure spending to help stimulate the economy amid the COVID-19 pandemic. The Build program has 92 projects with an aggregate value of 4.4 trillion pesos. Now, data from the Bangko Central showed the real estate sector made up about 18.5% of total loans in the month of June. The Trine Graduate School Dean Emmanuel Lopez says the move to hike loan limits complements the central bank's move to keep policy rates. Governor Diokno again reiterated the need for the pause, saying it was carried out to gauge how previous cuts are being digested. The Monetary Board maintained benchmark rates, citing benign inflation and early signs of recovery. Diokno specifically pointed to improving manufacturing and exports and notes that public construction are also seen to pick up with BBB programs. Now, for some updates on the Bayanihan 2 bill, the 165.5 billion peso proposal only needs President Duterte's signature for it to become a law. That's following the ratification by the lower house. The stimulus package includes a standby fund of 25 billion pesos, while the 140 billion pesos are classified as regular appropriations. It allocates funds to hire health workers and contact tracers, as well as subsidies to the unemployed. About 40.5 billion pesos will go to health programs, whereas 55 billion pesos will be used by government financial institutions as fresh capital. That's according to Senate Finance Committee Chair Sangienda. Let's kick off on the global equities front as we open our Bloomberg terminals together here. Just very quickly at how Wall Street had performed on Monday, and generally euphoric. You can see the Dow Jones up by 1.4%, the S&P 500 up by 1%, and the Nasdaq as well. These U.S. equities are actually rising to a record high, and that is amid optimism for the coronavirus, amid reports that there were slowing down of cases in Florida and Arizona as well. Treasuries over in the U.S. retreated. So S&P 500, another all-time high. A lot of analysts saying that despite all of these cases, that would not hamper the reopening of the U.S. economy. Investors are also turning their focus to the potential of vaccine development. Nasdaq Composite also closing at a record high for a second consecutive session. Now, you've got Moderna Incorporated. They have said that it is near a deal to supply at least 80 million vaccine doses over to the European Union. And take a look at how Europe performed yesterday. The Euro Stocks 50 up by 2.2%, FTSE 100 up by 1.7%. Everyone very, very hopeful there. And markets still awaiting the U.S. Fed Reserve Chair Jerome Powell's scheduled speech. That will be on Thursday, about what the Fed is going to be doing in terms of their monetary policy framework. And you can see the Asia Pacific region generally feeling this optimism as well. So that has been spilling over. Japan seeing highs and up by 1.5% for the Nikkei 225 over in Hong Kong, and Shanghai and Shenzhen, all of them enjoying that bump up. And this comes amid a rally of Asian stocks that we'd already seen yesterday. So that was Monday. However, we are going against the tide. If you take a look at our local index, we're opening once again on the back foot. It's rather dramatic, actually. It's a slide of 0.8% in just the first 40 minutes of trade. We are back to 5,800 levels, 5894.11 after we had already breached the 6,000 level downward over in Monday. Yesterday, we were already down by 1%. We saw a sell-off in more than half of the blue chips. And this, again, despite the fact that Asia was performing very well. So what is driving down our stocks? Well, this according to Phil Stocks, local bourse declined due to a lack of the fresh leads in the market. There was foreign selling, I'm going to pull that out for you, of more than 1 billion pesos yesterday, and that had dragged the market down. And this was actually what also caused a spike in the trading volumes. But this, according to Chris Mangolan, was really just because of a large cross trade worth 5.2 billion pesos into Emperador. So without that, you would actually see the daily average volumes rather low. Now, another thing that might be causing market weakness, this according to Jonathan Rabelas, who is, of course, the chief market strategist at BDO, he's saying that the weakness could be due to the fact that markets are disappointed with the size of the fiscal stimulus. So Congress, as I mentioned earlier in the banner, has now approved the bill of 165.5 billion pesos. Now, this is far below the estimated 1.6 trillion peso recovery plan suggested by the lawmakers. So Ravelas was saying that a bigger stimulus that had been approved would have actually spurred the markets, but as it happens, this is not what we see. Now let's take a quick peek at our sectors here. Properties were what dragged the bourse yesterday the most. And you can see that pain continuing over in Tuesday's morning session. Property is still down by 0.9%, but industrials are shadowing those losses. That's down by 1.5%. Financials as well. Now, what's going on with property? So this, according to Chris Mangan, they took the biggest hit yesterday, wiping out all the gains that that sector had seen in June and July because of the fact that mall revenues were continuing to drop, masses still avoiding the crowded area. So SM Prime was actually the worst hit yesterday. But I do want to take a quick peek at how SM Prime is doing today, especially because there's a lot of news surrounding the possibility of them doing another REIT. So actually applying for that. This is according to IFR. So they had reported that SM Prime has mandated Credit Suisse, JP Morgan, and UBS to arrange the sale of what could be around $1 billion REIT. Now, they had cited people with knowledge of the transaction, but SM Prime President Jeffrey Lim had now said just a few minutes ago, actually, in a mobile message to Bloomberg, that they have not given any formal mandate yet. Nevertheless, a lot of speculation here and also some opinions. For instance, one from Rachel Cruz, she is from AP Securities, saying that this might actually show SM Prime's confidence in a recovery next year. It would not do a REIT unless it was going to get a good valuation for its small assets. The sources of Bloomberg have said that the REIT may consist of SM Prime's Philippine shopping malls. Rachel Cruz is actually saying they will likely put the mature malls into the REIT and then use the proceeds to boost residential and office developments. Now, another one that's banking on expanding its office developments is Mega World. So I just want to take a very quick peek at how Mega World is doing this morning. It's actually down by 1%, together with SM Prime also slumping amid all of these REIT news. Mega World is saying that they're still targeting to launch more office spaces despite the pandemic. So they're still targeting to launch 110,000 of leasable office space this year. This, according to CEO Andrew Tan. They said that despite the cut of its capital expenditures this year by 40%, to 36 billion pesos, they've decided to stick with projects that have already been committed for completion. And they said that the strategy of reinforcing office rentals even before the pandemic actually helped them with the recurring income and offset the slowdown in the mall business. So having this recurring income from the office space actually helped buoy the company, but they're still evaluating whether they will be paying cash dividends this year. Now, I just want to also take a very quick peek at our local currency, the peso, of course, which has been the star performer as of late. You can see your screen, you're inching our way towards 48 levels. We're now trading at 48.51, another strengthening. We're advancing closer and closer to those 48 levels. This after the comments that we had reported earlier on by Ben Diokno. First of all, he did mention that Philippine rates may stay on hold for the rest of the year, especially if things should continue where it is. this. He says that the financial system currently flush with liquidity. Policymakers, of course, are set to make another rate decision on October 1st. Another thing that may be moving the peso, according to some analysts, is the fact that he mentioned that the market was free to determine the peso's level. So he mentioned that if that is where the market is going, I quote him, we can't do anything about it at the moment. He says that there are actually benefits to having a strong currency. These include weaker inflationary pressure, lower foreign debt service costs, and the potential for beefing up international reserves. Now recall that the peso, I'm going to take out the rankings for you guys so you can see how we're doing. The Philippine peso up by more than 4% in year to date. We are the best performing in the Asian basket, one of the most stable currencies we've seen. This as we've reduced our imports, and also the dollar has been weakening. This according to Shi Gao, he is from Scotiabank in Singapore, expects the peso to advance towards 48 to $1 in the medium term. So more markets later on in the broadcast with ICCP's Manny Ocampo. Let's check in on the biggest headlines we are watching this Tuesday morning. Going cashless may also soon be the norm when it comes to tollways. Now, the Transportation Department has ordered concerned agencies to implement cashless and contactless transactions in toll plazas as a way to prevent COVID-19 transmission. The Toll Regulatory Board has been instructed to lead the way, while the Land Transportation Office was ordered to conduct a study on the contactless initiative. Meanwhile, the LTFRB had been instructed to check whether all public utility vehicle operators can comply with the DOTR order. The cashless payment policy will be implemented in SLEX, NLEX, Manila-Cavite Toll Expressway, Star Tollway, SC Tex Cavite Laguna Expressway, and the South Metro Manila Skyway. Transportation Chief Artugade acknowledged that there may be some initial inconveniences, but the policy will be beneficial in the long run. Philippine laptop companies reported a spike in global sales during the lockdown period. However, a decline in global electronics manufacturing capacity has also caused a shortage of supply here in the country. Lenovo Philippines recorded at least a 26% spike in its global laptop sales. It's based on shipment quantities. Asus Philippines attributed the rise in demand to the shift towards remote work setup. This is on top of parents buying devices for their students as they prepare for online learning. And that's why they expect the strong demand to remain until the end of the year. However, Lenovo flagged that local sales could have increased by more than double if the pandemic did not affect their supply side. This meant that 30 to 40% of local demand remains underserved. The company identified several bottlenecks in the supply chain, that's including shortages among CPU and component providers, skeleton workforce, and the importation restrictions. The government and the European Union have signed a new financing agreement worth 24.5 million euros, that's about 14 billion pesos, to support the rehabilitation of parts of Mindanao. In a statement, the Finance Department said that this included funding for the recovery of Marawi City and to boost the pandemic response in the BARMM region. The Philippine Red Cross and France's Agency for Technical Cooperation and Development have already submitted proposals on how to use the earmarked funds for the region's COVID-19 response in the region. The project will be implemented by the Office of the Presidential Advisor on the Peace Process and the Bangsamoro Transition Authority within 5 years after the agreement is sealed. Now, this brings the European Union's total grants for the government's peace and development efforts to 85 million euros this year alone. Meanwhile, active grants from the EU to the Philippines have reached a grand total of 150 million euros so far, with up to 30 million euros more still in the pipeline. Markets over in the US were euphoric yesterday. Asia beset with gains this morning, but the optimism has yet to infect our Philippine markets. Here to share with us where to put the money, we've got with us ICCP's Manny Ocampo. Good morning, Manny, and welcome back.
Hi, good morning, Danny. How are you?
I'm good, thank you, and very good to see you looking very well this morning, sir. Manny, let's
Thank
kick
you.
off with what's happening and why we are sitting out this global rally. There's been a lot of optimism over in the United States, a lot of news on possible, vaccines coming into play. The rest of Asia also rather optimistic this morning, and us still sitting out the party. What's going on here?
Okay. Well, for the US first, let's tackle that. That's the easier one. Um, you see a lot of fund managers there lacking alternatives right now. So they've been really focused on the stock equities market as a play for the funds they have under management. They've looked at, I think a lot of them have looked at fixed income securities, but that doesn't really give anything much. Some of them have looked at metals. Gold prices have gone up as well, but I think bulk of it is really focused on equities, and we're seeing the U.S. markets really gain from that, shall we say, lack of alternatives of the fund managers there. Back home, it's a little bit trickier. I think there's markets still remain shall we say disappointed with how the government is carrying on with the current issues we have to address the pandemic. The Bayanihan 2 bill, for example, fell a lot short, and question marks also on how how we move forward, how the growth stimulus gets implemented with I guess all the questions that arose, field health messing up, shall we say, funds allocated to it to help on the pandemic and all. So I think it's investor confidence is not quite there yet, whether we could carry out in a more cohesive way our path back to growth and recovery.
Okay, and sir, you already mentioned the fiscal side, which has you mentioned is underwhelming compared to what
Yes.
investors were hoping for. And now on the monetary policy side, Ben Diokno, the governor, is saying he's done for this year. Possibly, they've done enough already. The Bangko Central has pulled its weight. There are other ways to actually do it apart from just a rate cut. Is this also contributing to the jitters here that perhaps the monetary policy is done for the time being in terms of easing?
Yes, although BSP has come up with a few pronouncements that we hope would provide a boost. For example, the lifting of the loan limits to property companies from 20 to 25%. That should have impacted the property sector positively, but I guess the question there is a lot of fund managers' minds is whether the buy side is still there. I mean, making loans available to property companies helps the supply side in the sector, but the demand side is still a question mark. Buyers suffering right now, OFWs losing their jobs abroad. So that's one market taken out. So,
Okay, so
on the
despite the fact of
yeah,
liquidity, there's still the issue of whether this liquidity will be tapped.
yes. Well, I think liquidity being made available to consumers or to the end markets, it's something that people are holding on to cash. With the uncertainties, that seems to be the psychology right now.
Okay, sir, moving towards long-term outlook here, you've actually got SM Prime, and this is still according to some reports. They have already clarified that they have not mandated anyone yet for the REIT, but a lot are speculating that this would happen. They had actually, a lot of reports even last year were already saying that the biggest property company was going to be doing this. Now, a lot are saying that they will be REITing out, if that's a term, the malls, right? The mature malls, and then using these
Yes.
proceeds for the office space and residential. Will you be buying into that story, especially since the malls are the ones empty right now? There are
That's right.
less tenants, and you want the proceeds from these recurring revenues.
I think if the story there is to buy low, if they sell low, yes, it may be something
Okay.
of interest. But really, it's a sector that brings more questions than answers. No, I don't think SM will force the force the issue and come to market right now. You see empty malls, you see people vacating the malls already, so that's a big question mark. People may have been anticipating that, yeah, they'll over time they'll probably come out when things normalize, but now is obviously not yet the time. The I guess property companies that are more focused on more stable office rentals would
Mhm.
probably be out there looking to raise alternative funds, no, through the REITs.
Can you compare this though with the A REIT and also Double Dragon, which has right now filed also for a REIT? Do you mean that because there was a lot of appetite, nevertheless, for the A REIT, and that, as you mentioned, was linked to office spaces? Is that a better alternative for investors?
Well, it's more stable. The at least that the tenants are going to be staying there for some time. These are businesses anyway, or BPOs, or even POGOs, for example. They are committed to stay for a certain number of years, and that's a cash flow and dividend stream that investors can bank on. Um, the SM Prime malls, the malls, a mall REIT, for example. That's we don't know whether the mall will be half full or half empty by next year after everything is said and done. So that's it's really a big question of whether you come out with that at this point in time,
Okay, unless it's very cheap, as you mentioned. Sir,
unless
let's
it's
move
very cheap.
over to the telco space. And I just want to show our viewers here in the terminal that Tito Telecom is up again by 6.6%.
Yeah.
And this amid news that the House has granted a 25-year franchise to this third telco player. Now they've also at the same time given more plans under Dito CME. So that's actually going to be investing in entertainment programs, sports programs. It's a media company. Tell us, what's this franchise, this 25-year franchise, not already priced in beforehand, especially when they were already announced as the third telco player? Why is there so much excitement here, and is this excitement justified?
Well, I think the 25-year franchise, shall we say, sustains or justifies the reason for being of Dito Telecom. It's formally there. You have the law behind it already. Will their entry into media will probably be in the same digital type platform that we're seeing the another broadcast company suddenly was forced to go into, shall we say, no? But
Mm-hmm.
that seems to work, and Dito has also taken in quite a few industry personalities
Star
that
Wars, yes.
bring with them, yeah, they bring a lot of track record. Eric Alberto, coming from
Mm-hmm.
PLDT, former folks from ABS-CBN coming into the
Correct.
media entertainment side of Dito Telecom. So you know that they're very serious, and Eric Alberto, assuming the CEO post, also says that, well, at least now people that know the business are really in charge over there.
Okay, sir, are investors brushing off President Duterte's remarks on the SONA targeting the incumbent telco players right now? Because they're still, for instance, PLDT is still the number one performer year to
Right.
date. So are they discounting, let's say, the regulatory risks in terms of these telcos possibly being shut down?
Um, it well, it doesn't make sense to do anything with the two majors right now. Dito to come up to a meaningful level is a good several years away. So it'll probably pass this administration.
Okay, so it's something that's not necessarily worrying investors here. So let's talk about other regulated stocks here. I just wanted to break the news on Meralco. They are actually offering aid to power users now. So the government
Yes.
has suggested for them to to be giving some form of aid, especially to their poorest customers. They've said they will comply with that. Tell us, what's your sentiment on regulated stocks like and utility companies? You've got Meralco, Manila Water, Maynilad. These used to be the defensive stocks when it comes to crisis situations, less risky because you've got the rates already put in. And now they're actually the ones that need to be, as we talked about off cam, helping out the country when it comes to the pandemic,
That's
giving a little bit more free services. What's your position on them?
Well, they take a bit of a hit in the near term. I don't think that's something sustainable. But the utilities, as you mentioned, are on fairly strong and good footing as far as revenues and all that are concerned. Not all sectors of the economy are hurting, but the challenge sectors are the ones that do need help from the utilities. So that's there. But business is still there. The more affluent sectors of society still continue to pay the correct rates. So maybe a socialized type of pricing is something that the government is encouraging the utilities to consider.
Okay, and sir, before I let you go, just one very curious, question on Emperador and whether
Yeah.
them surging close to 40% year to date is in any way a fundamental surge. Is this backed by their presence abroad, and or their performance during the pandemic? Is this all excitement? And can you consider this a real defensive stock now that it's been part of the index?
Well, we've taken a look at the U.S. markets, and the liquor companies have done fairly well under current conditions. I don't know if that's
Wow,
shall we say, ease current anxieties.
anxiety.
Yes. So people turn to, I don't know, turn to drinking. But having said that, Emperador has a fairly strong portfolio of companies outside the Philippines. They have wineries, they have Scotch whiskey companies in England, etc. So they're fairly strong on that one. And that demand for their products remain fairly strong and stable, even under current times. I guess even stronger under current times.
Okay, so it's one of those defensive stocks that are actually doing better in this pandemic
That's right.
compared to the
That's
rest of the markets, let's say. Thank you so much for those insights. That was, of course, Manuel Campo from ICC.
Thank you.
And that's the first look into the business day. Today is August 25th, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danny Laurel, and we are What News.